All right, everybody. Hello again and welcome to Choosing the Right Coverage, What You Need to Know. I'm Wayne Staub, and I am your host today. I have the pleasure of serving as the Chief Member Experience Officer for NJBIA and I'm part of our membership team. Today, Tim Harvison, the Chief Operating Officer of Association Member Trust, is with us. A little more about Tim in just a second. AMT is just one of the services that NJBIA provides to help business owners, job creators, and their employees, as well as things such as HR support, the high cost of running a 401k, payroll, shipping, training, and many, many more services. We would welcome the opportunity to tell you more about us and how we might be able to help your business issues you might have. Just reach out today through the chat and we will follow up. Just a few last housekeeping items. Today's program is being recorded and we will email to you in the next few days, so please be on the lookout for it. I'm going to remind you to keep your cameras on so we can all interact with each other during the program. Tim would be happy to take your questions at the end, so get them into the chat and we will make sure we cover them all. So finally, with that said, I'd just like to introduce my friend and colleague, Tim Harbison. Tim is the Chief Executive Officer of Association Member Trust and its wholly owned insurance company, the AMT Agency LLC. He brings more than 25 years of experience in the healthcare and employee benefits industry, including a distinguished tenure at Horizon Blue Cross Blue Shield of New Jersey, where he is most recently led the large group market segment and managed some of the state's most extensive and complex benefit relationships. That experience defined his leadership today. Under Tim's direction, AMT continues to thrive as a unique multi-association benefit trust, delivering strong, compliant health plans and meaningful value to small and mid-sized employers across New Jersey. Through the AMT Agency LLC, he has broadened that mission with a full scale of voluntary and ancillary insurance products, giving employers and their employees more choices, more value, and a simpler, more streamlined benefit experience. Tim is passionate about helping business navigate an increasingly complex business landscape with clarity and confidence, pairing thoughtful plan design with personalized guidance and modern, easy to use tools. With that said, I'd like to introduce and turn it over to Tim Harbison. Tim, it's all yours.
Thank you, Wayne, and good morning, everyone, and thank you for joining us. I want to thank NJBIA for hosting today's session. I'm Tim Harbison, CEO of Association Member Trust, AMT, and the AMT Agency. For the next half hour or so, my goal is simple: to give you a clear, plain English roadmap for choosing the right health coverage for your business. Health insurance can feel like its own language, and the decisions come at a very fast when the renewal season hits. So whether you're an owner making this call yourself or you're a person in HR who lives with these choices, my hope is that you walk away today knowing exactly what to look for and what questions to ask. We'll keep this practical, so let's dive right in. So our agenda today, we're going to start with the renewal period and what it is and why your timeline matters more than most people realize. Then we'll talk about reviewing your options each year and the basics of how plans are actually designed: in-network coverage, cost sharing, all of it. From there, we'll get into HRAs and HSAs, those funding accounts that can make a higher deductible health plan a lot more comfortable for your employees. We'll cover provider networks and the trade-offs between them. We'll touch on voluntary benefits, and I'll show you how AMT can help. Don't worry about taking notes on every detail. The goal is to make sure these concepts click with you. So let's begin to start discussing the renewal period. Okay. The single most important date on your benefits calendar year is your renewal period. Your renewal period is the window when you, as an employer, can actually make a change to your health plan. For most groups, that date is January 1st, but that's not universal. It genuinely varies from one employer to the next, depending on when you first set up your coverage. So your first job, and I mean this is step one, is to find out exactly when your plan renews with your current carrier. You'd be surprised how many business owners aren't really sure. Everyone, else we talk about, in today's day, they ask from time to time, what is their date? They're just not sure. So that is something you look at your renewal coverage. You should be getting that, and you talk to whoever's representing you about when your policy renews with your current health plan. Once you know your renewal date, the rest of the calendar falls into place. There's a rhythm to it. First, step one, as we said, confirm the exact date when your benefits renew with your current carrier. Step two, your carrier delivers the renewal to you. By regulation, your carrier is required to give you the renewal at least 60 days before your renewal date. So if you renew January 1st, you should have your paperwork in hand by early November. That 60-day window is your minimum advance notice, and that's your runway to make decisions. Step three is options get presented to you. Carriers will weigh a lot of factors when they set your increase. Your group's claims, the broader market, medical inflation, prescription costs. The good news is they'll often present you with several options designed to save you money. That's where the real work and the real opportunity begins. So the takeaway here is don't wait for the renewal to land on your desk. Know the date, expect the paperwork 60 days out, and be ready to start evaluating. Review your options every year. I want to be direct about this. Review your options every single year, not every 3 years, not when the increase gets bad, but every year. And as you review, you're really balancing three things. First, affordability, predictable costs that fit your budget, both for the company and for your employees. Second, network access, real reach to doctors, hospitals, and specialists that your team actually uses. And the third is the benefit design, the right mix of deductibles, copays, and coinsurance for your specific population. The goal we're all chasing is the sweet spot, comprehensive coverage, and a broad network that still stays affordable. You don't have to sacrifice one to get the others, but you do have to look closely every year because the market shifts and so does your team. Benefit design basics in network. So we're going to talk about how most plans are actually built, starting with the networks. Here's something a lot of people don't realize. Most benefit plans today are in-network only. That means if an employee goes to a doctor or facility outside the plan's network, there's simply no coverage for that visit. The two exceptions are a true medical emergency or accidental injury. Those are covered regardless. But for everyday care, staying in network isn't a preference, it's a requirement. And this is where AMT has a genuine advantage. Through AMT, your employees get access to the largest provider network in the country. We offer Horizon Blue Cross and Blue Shield plans. That's thousands of doctors and facilities right here across of New Jersey and nationwide coverage through the Blue Card program. So a member traveling or living out of state is still covered. When the network is that broad, in-network only stops feeling like a limitation. Cost sharing. I want to talk about how cost sharing works. So this is a key insight. Most plans cover the same services. A doctor's visit is a doctor's visit. A hospital stay is a hospital stay. What actually differs from plan to plan is the level of reimbursement. In other words, how much the cost the employee shares. So let me walk you through the four pieces. First, the deductible. That's the amount the employee pays first out of pocket up to a set dollar figure before the plan starts paying. Second, copays and coinsurance. A copay is a fixed fee. say $30 for an office visit. Coinsurance is a percentage. The employee pays a share of the cost on the covered service. Third, the out-of-pocket maximum. This is the most an employee will pay in cost sharing for the entire year. It's kind of their safety net. And fourth, this is the part that people love the most, is once the out-of-pocket is met, eligible benefits are paid at 100% for the remainder of the year. So no matter what happens medically, there is a ceiling on what your employees will pay. That is the cap that gives them the most reinsurance of any plan. And it's worth pointing out to your team that while they're sharing in the cost, there is a maximum out of pocket that they have. So balancing the cost and coverage, this is an important point. So if every plan covers the same services and the difference is cost sharing, here's the lever you get to pull. There's a trade-off built into every plan. Higher employee cost sharing means lower cost to the employer. When you raise the deductibles or copays, the premium comes down. And I want to be clear, that's a deliberate financial lever, not a loss of coverage. The benefits are the same, you're just shifting where the dollars sit. Now, the natural concern is, I don't want to hurt my employee by raising their cost. And that's very fair. So here's the fix. You can fund an account. You pair the higher cost sharing design with a health reimbursement account, an HRA, or a health savings account, an HSA, to help offset what employees actual pay out of cost. The result is the best of both worlds. Your employees get real help with their out-of-pocket costs, and you keep your premium predictable. That combination is one of the smartest moves in benefit design, and it leads us right to the next slide. HRA versus HSA. So let's compare these two accounts side by side because people mix them up all of the time. They sound familiar, but they work very differently. So we'll start with an HSA, the health savings account. The key word here is owned by the employee. It's portable. It stays with them even if they leave. To have one, the employee has to be enrolled in an HSA qualified high deductible health plan. Both the employer and the employee can contribute. And the HSA carries a triple federal tax advantage. Money goes in pre-tax, it grows tax-free, and it comes out tax-free for qualified medical expenses. Unused funds roll over year to year. It builds. For 2026, the contribution limits are $4,400 for an individual and $8,750 for a family, with an extra $1,000 catch-up if you're 55 or older. Now, the HRA, the health reimbursement account. This one is owned and funded by the employer. Employees don't put money in. As the employer, you set the rules, what's eligible and how much gets reimbursed. It reimburses employees for qualified medical expenses, tax-free on both sides. It gives you more cost control. And the trade-off is that it generally is not portable. And whether any unused funds roll over, it's your decision. It pairs flexibility with all kinds of plan designs to offset employee cost sharing. And one more set of numbers for HSA side. To qualify, the high deductible health plan in 2026 needs to have a minimum deductible of $1,700 for an individual, $3,400 for a family, with an out-of-pocket maximum capped at $8,500 for an individual and $17,000 for a family. The quick way to remember it is HSA, employee owns it, takes it with them. HRA, employer owns it and controls it. Both are very powerful tools for softening a higher deductible design. Choosing the right network. Let's come back to kind of networks because, here's where you have a choice to make. On one side, you have the broad network. This is the widest possible choice of doctors and hospitals and specialists, the highest access and flexibility for your employees. The trade-off is that typically covers a higher premium. You're paying for that reach. On the other side is the higher performing network. As it pertains to Horizon Blue Cross and Blue Shield, I'm referencing the Omnia network. This is more of a curated, smaller network. It's often priced significantly lower. The savings can be substantial, but it's critical that you verify that your key hospitals and physicians are included before you make this commitment. In some plans, broad network access still exists as a fallback, but as a higher cost share. So here's my advice before you decide. Go to the carrier's website, look up the hospitals and physicians your team actually uses, and then confirm they're in the network. Then evaluate the options side by side. A high performing network can save real money, but only if it includes the providers your people care about. So you really need to do your homework first. You can add value with voluntary benefits. Beyond medical plan, there's a whole category that can make your benefits package stand out without costing you much, and it's referred to as voluntary benefits. These are group style benefit programs that employees can elect and pay for themselves with no added liability to you, the employer. So you're enriching and offering your employees, a better benefit program at no
Morning,
cost to the
sir.
company. The menu is broad. It includes supplemental life insurance, vision, accidental injury coverage, legal plans, and even pet insurance. Things your employees genuinely value and might otherwise buy, on their own at a much higher rate. And here's why we make it easy at AMT. Through the AMT agency, you get one agency and one invoice. We offer a full suite of voluntary programs, and AMT consolidates all of the voluntary billing into a single, simple invoice. No need to juggle multiple vendors and 5 bills. It's all in one place, and that's the administrative simplicity that we bring to the table. So how can AMT help? Well, so what we can do, we can really help you in 3 ways. First, we have a team of expert advisors. You're not doing this all alone. We have a team that answers your questions and can guide you through your benefit designs and plan selection, walking you through exactly the concepts we've covered today. Second, we have an online quoting tool. You can evaluate different benefit design options and get a real-time quote in minutes. It's fast, it's transparent, and it lets you see the trade-offs we've been talking about today. Real numbers and a binding quote. And third, and this is my favorite, is the free health plan checkup. We offer a complimentary AMT health plan checkup for any business, from a sole proprietor to a group of 1,000 lives. There's no cost, no obligation. We'll look at it today, and honestly, we can get you something, out within a day or two. So to get started, you can visit us directly at amt-nj.com or the amtagency.com. So that brings us to the end of the formal presentation. So first of all, I want to thank you and NJBIA for giving us the time. We'd love to take your questions about whatever it is we covered today. If we can't answer it, we'll absolutely get back to you quickly.
So Tim, thank you so much. In my role, speaking with members and non-members, healthcare is a top concern for many of us, right? And as you pointed out, we don't want to hurt our employees, but we also have to balance the costs. So we have some great questions. Thank you for making that understandable. We appreciate that. Let's go to some questions here. So first one we got is, can an employee use both an HSA and an HRA?
So they can't use them at the same time. They depending on their populations, they could offer an HSA and an HRA, but you can't be enrolled in both at the same time.
But the employer can offer both.
Correct. The employer could have multiple benefit options, giving their employee the choice to enroll, but they cannot contribute to both the HRA and the HSA It's based on whatever plan that employee enrolls in.
Okay, great. Hope that answers your question, Paul. So again, I come across so many members who have some general questions I'd like to ask. And you touched on it a little bit, but the enrollment, the renewal period. Sometimes I have members or non-members who feel that they can renew at any time and change coverage. Can you just expand on that a little bit,
Yeah,
Tim?
yeah. That it's a good question, and people often get confused. So employers, they can typically enroll really one time a year, and it's typically January or their renewal date. And so in the small employer market, groups can renew throughout the year. So they could have an April renewal date, they could have an October, July, whatever that date is. That becomes the opportunity at the renewal period, when they can offer different benefit designs to their employees, and also during the period what's referred to as open enrollment, which is the end of the year, which would take effect on January 1st. So to answer your question, groups are restricted, or they're limited to either the annual open enrollment period, which would take effect on January 1st, or their renewal date. They would be the two times of year when a group can actually make a change or enroll in new coverage.
Great. Another question I frequently get, Tim, is we already have a Horizon plan, so does it make sense to even look at these plans?
Sure. So that it's a great question, and it does come up often. So really, with AMT is a multiple employer welfare arrangement, and we are the only registered MIWA in the state of New Jersey. And basically, we are a compilation of 17 trade associations that have come together to offer benefit programs to the members of these respective associations, with NJBIA being the largest. So as a large entity, and we represent several thousand members, we are administered in Horizon's large group market. So we have a dedicated team of advocates that support our members, as well as having a dedicated team here at AMT that can provide the additional support. We also rate our populations differently. So we are looking at our entire population, where, if you're going directly to Horizon, depending on the size, you're going into their pool. And so we may, in some instances, provide a more competitive program than what Horizon does. So there are trade-offs. We have a broad portfolio of benefit programs similar to Horizon. We use Horizon's networks. Horizon administers all of our programs, but we're taking on the risk. And so in some cases, we can provide a much more competitive proposal. And also, we are a full service agency, and we've been appointed by Horizon as what they refer to as an exclusive master broker. So there's only 9 master brokers in the state of New Jersey. So in order to purchase coverage directly from Horizon, a group of under 100 lives has to go through a master broker, and we're one of those. So we can take any of our groups that approach us, and we can look at both the MIWA, for quotes, or through Horizon. So we can look at both ways to find the most affordable solution, for our populations.
So basically, more choice, more options, even with what they have now. That's great. And I just want to say, this is a little bit more of a commercial. Every product and service that we highlight, including AMT, we, the association NJBIA, use it. It's our healthcare. It's our 401k plan. Tim, one other question tied to the customer service side is, number one, if having a problem with a billing or a situation, is there advantage working with AMT? And also some of the other services we've talked about that the agency can provide as far as COBRA coverage and those types of ancillary things.
Sure. Thanks, Wayne. So AMT has a full team of sales executives, implementation specialists, and service representatives. So we have a team here that can work directly with your HR staff, with your members, to really walk them through the process. Our team will go on site, conduct enrollment meetings. We're there to handle everything from end to end, from a claim issue, to ordering a new ID card. So we have full access to all of Horizon's services and systems throughout that process. We also do all of the billing. So we have electronic billing, we have electronic online enrollment. We also do all of the COBRA administration for no additional expense to our groups. We have a partnership with Health Equity for the health reimbursement and health savings accounts. And again, there's no additional cost to our employer groups that offer those programs to their membership. We have a separate partnership with Delta Dental and MetLife for the voluntary programs, including supplemental life insurance.
With that supplemental life, are there medical exams required, or how's that work for the?
So we have two different types of programs. So we have group life through the standard for our groups, but we also have supplemental life in our voluntary portfolio. So employer groups, when they roll that out, their employees can get coverage up to $100,000 guaranteed issue, meaning no medical underwriting.
Right, right. I think that was important. Also, Tim, you mentioned the multiple employer association relationship. Can you just touch on that? Is that a nonprofit? How's it operated?
Yeah, so we are set up as a not-for-profit trust, and we are the only registered MIWA in the state of New Jersey. We've been around in our current form since 1978, and we are regulated by both the Department of Banking and Insurance in New Jersey as well as the Department of Labor. And as a regulated entity in the state of New Jersey, we are required to file all of our rates that have to be developed and approved by an independent actuary, and we file them with the state of New Jersey, including our plan designs. We also are required to file all of our financials with the state. The state sets very steep thresholds with regards to financial reserves, which we are far in excess of that when we post all of our financials on our portal as well. So we're completely transparent.
And Tim, I do want to get the wording correctly, so I'd like you to make sure I'm saying it right. Is because of that and the managed costs of the association, we were able to return some interest to participating businesses. Can you explain that a little bit?
Absolutely. And that's a good point. So, as a trust, we maintain reserves, cash reserves, to ensure that we always have adequate funds to pay claims. And our funds far exceed what is required by the statute. And those funds are limited in how we can invest them. So they're limited to government securities, treasury bills. And so the interest earned on those reserves each year are distributed back to the membership in the form of a distribution, and it offsets their premium. In this case, I think in the latest year, I think it was 1% to 2% of the annual premium was returned to the employer groups that participate with AMT.
Right. That I do think that's an important part. NJBI, I appreciated getting that reimbursement or credit. I'm sorry, credit moving forward. I really don't see any other questions right now. Tim, are there any last thoughts or words on if people, like you said, take anything from this, what are you hoping that they take from it?
I think that the one thing I think people, regardless of their rate action, they should always look. They should always evaluate and really look at the programs that are available to them, because these are very unique times. Affordability is crucial. We want to make sure we provide our employees comprehensive coverage. But costs are really skyrocketing, and we're always looking for very creative ways to see how we can continue to control costs without sacrificing benefits. So I encourage any employer that's on this call to always ask questions, evaluate all of their options each year.
Great. And again, as you mentioned, it's cost nothing to get a quote. That's one of the things, I always think about my mother, and she would always say, if you don't ask, you don't get an answer. And the expertise and customer service that AMT brings with it is amazing. That's why we partner with you. Quick experience note: I have children who went to college outside of the state of New Jersey. Never had problems with coverage. If there was a billing issue, we talked with AMT and not the Horizon Blue Cross Blue Shield network, and we're able to get resolution. So a little testimonial for the product and the service. With that said, Tim, want to thank you and your team for everything that you do. I want to thank everybody for taking the time today. If you have questions about our other products and services, please feel free to reach out. I put my phone number and information in there. Danielle, I'd like to thank her for taking care of everything. She will be sending out the presentation and the recording in the next couple of days. If you have any questions, in between, feel free to reach out to either Tim or I. So I want to thank everybody, and I hope you have a great day. Thanks.